Hey guys, welcome back to the channel. Let's Make a Mill, where I'm basically just documenting my journey towards making $1 million. My name is Eugene Vasquez. I'm the host of the channel, and if you don't know, now you know. But really, all for real, I try to be transparent in these videos to kind of show everybody, what am I doing? What is my thought process? Uh, what are my goals? How am I doing this? All this other stuff. I try to be as transparent as possible. And one of the things that I have been using has been spreadsheets to kind of track my overall progress, and I do them once a year. Every time I get paid, every time I make an investment, every time I buy something, every time I get a dividend, I'm updating these spreadsheets. This has been a useful tool just for me, so I can get an overall picture. Because things like personal finance, Mint, those personal finance apps out there, they don't really give you. I mean, they give you a lot of good information, but it's like, how do you interpret that? Uh, some of the spreadsheets that I've created, they kind of help me interpret the data a little differently by giving me some graphs and things like that. It just helps me kind of change my investing strategy, kind of like keep to a ratio, or just be mindful of whatever. It's just the more data you have, the smarter decisions you can make, especially when you know where all your money's going. So with that being said, I just want to start the video off with telling you guys my portfolio principles. I buy simple, buy and hold long-term passive investments. Like I've said in plenty of my other videos, I'm not a speculator. I'm not a trader. I don't flip houses. I'm not buying crypto. I'm not buying, just really crazy investments. I'm a long-term investor. I have a vision of the long term. Sometimes it gets, sometimes they have that carrot, dangling on the stick in front of you. Like buy Tesla, buy this new tech stock, buy whatever. And I just avoid it because it's not part of my principles, not part of my portfolio principles. So I try to invest in things that I understand. Things that I know will go up in value, or things I know I'll be getting a dividend or a return on while I keep my money in there, and as long as my principal is protected. So let's dive into the spreadsheets and start taking a look around. So again, we're starting on a brand new year. This is January 2nd. Today's January 2nd, 2020. And I want to show you guys all my properties and their costs. So I purchased a 3-unit multifamily home for $87,000. The total asset cost was $327,000, so I put about 25% down. I still have some rehab costs that I have to go through that'll be coming up. Makeup of the portfolio is 29%. My annualized return on that investment, if everything goes right and if the tenants all pay on time, and if there's no vacancies or no large expenses, I should have a return of almost $15,000. And we'll move over to the right, and I'll show you all the data as soon as we finish over here. Also, this year I purchased another single-family home earlier this year for $31,000, almost $32,000. Makes up 10% of my overall portfolio, and I'll be showing you what my portfolio actually looks like. And annually, I expect to make about $4,500, $4,600. Again, if there's no large expenses and things like that. And 2019, I purchased another single family home. This one, the asset cost about $78,000, $79,000. I think with like a 3,000, 4,000 rehab. And then the down payment was $23,000. And then my first house, which has been my problem child, but I love her dearly, is the asset cost was 100,500 is what I purchased it for. I have a mortgage on it. My down payment was about 25% with all costs including the rehab. It was about $42,000. If everything goes correctly, again, if then I would or should receive a cash return of $6,200. So moving on, in my 401k account, I have a cash value of $50,746. It makes up about 17% of my overall portfolio. I'm invested into a single index, the Vanguard S&P, or the Vanguard index, Vanguard 500 index, which follows the S&P 500 index. So I have all my cash in that one single index. The dividend's between like 1.9% and 2%. I just keep it at 2%. So every year I expect about $1,000. Moving on to my brokerage accounts. In Fidelity, I have $16,580. This is invested into Feezy Rocks. If you guys seen my buy update videos or my prior videos on Fidelity's zero cost index, I had a huge cash position, but I actually withdrew a lot of that so I could invest into this multifamily home. Um, if everything was go right, again, the dividend yield, all that stuff, I should get about $330. It makes up 5.5%. In my M1 Finance portfolio of real estate income trusts, which is my dividend income portfolio, it's a cash value of $20,900. The makeup is 7%, and it's currently yielding about 3.6%. So every year I should receive about $752 on the portfolio, but I'm going to be growing this year to hopefully, $35,000-$40,000. So this number will increase. I opened a small position into tech. I'm investing on Robinhood through with ARK Invest in one of their ETFs called ARK Innovation ETF, and it's a combination of the 3 or 4 other funds that they have. If you want to learn more about ARK, ARK invest.com. The fund manager is Kathy Wood. I watched a couple of interviews on her, and I got excited about what she's trying to do, and the direction she's heading in. I think it's a very fantastic kind of like mindset and how she sees the future. So I'm just excited, and I wanted to get some exposure to tech because other than the total stock market index that I'm invested in, I'm not really invested into any tech stocks. So I felt like I wanted to get some exposure into the portfolio, and I think it'd be a little fun to invest into some high growth stock. So I invested into the RK ETF because I don't want to choose individual stocks. I just don't trust myself, and I know that uh, that if I just know that if I try to pick something on my own, it probably won't do so well. So I decided just to go to ETF, where people smarter than me are going to be doing the money management piece. So it only represents a small fraction of my overall portfolio of 0.31%. There is not really a dividend yield on this. It's a high growth ETF, so I'll be capturing a lot of the capital gains. And finally in my Fundrise passive REIT portfolios, I have Fundrise cash value of 24,000. It makes up 8% of my overall portfolio. It yields about 3.6%, according to Fundrise. So every year I should receive about $864 from Fundrise on top of appreciation. All right, so it'll be dividends and then appreciation. Mogul Realty is not really a REIT I really invest with as much as I do with Fundrise or the other companies that I invest with. Mogul REIT was more of an experimental kind of thing, and I mean they delivered on their promise of 4.5% dividend yield so far, and I may try to go with them once I have some more cash or capital to deploy. But for now, I'm going to just stick with Fundrise. Again, follow one course until successful. So I'm going to focus on Fundrise out of the two. So looking at the possibilities of my annualized returns, my initial investment into all my investment portfolio or into my rental properties is $184,000, and I expect $28,600 in profit per year. But that's minus any expenses or unforeseen expenses or damages to the property, vacancies, and all that other hoo-ha. Again, I say this to everyone who's thinking about real estate. Real estate is not for the faint of heart. You really have to have a strong mindset, some strong mentors, and a lot of cash. So moving on, my retirement account is $50,746. Makes up that much of that portfolio. My total stock account investment is $38,397. That's all three of these companies, or all three of these accounts here. And then for my passive REIT, these are all the accounts here: Fundrise, Realty Mogul, and then the account totals. So every year, if everything worked out well, this is what I should be seeing in terms of profit: $31,699. All right, so we're going to quickly go up and go to the right to look at investment property stuff. For those of you who want to get into kind of real estate, this is what my portfolio expenses, things like that are looking like. So for the rents, $3,400, $950, $975, and this one's really a wild card. It was 1909. It'll probably drop down to 1650 depending on if I get another Section 8 tenant or if I get someone off the market or out of the market, whatever. You know what I mean. For mortgage, this is how much it's going to cost because I owe mortgages on all these properties. These are the property management expenses. This is what I expect to make a net profit. So at the end of every month, if everyone pays their rent on time and no vacancies, no issues, no capexes, no expenses, no things like that, this is what I would get passively, $2,400. Pretty good in my opinion. I could use that money to pay down debt or pay off mortgages or use that invested in the markets. This is what the net profit would look like. This is the yearly gross in rent, if everyone's paying the rent. 87. I'm almost up to $100,000 in actual passive income gross, of course. And then the return on investment. How long would it take for me to reap my initial investment? It would take 5.8 years, 7 years, 8.1 years, and 6.2 years. And then these were the costs of all the assets. So in all of my assets, I have 600,500 in total assets for rental properties. So, again, it's January 1st. I don't have any data to plug in yet because I haven't received any rents, anything like that. But we'll be doing updates, quarterly updates on this stuff, or maybe monthly updates. I haven't decided. We'll do some kind of updates going forward. So, taking a look at the portfolio now. Here are my cash investments right here. So the account totals is $312,000, but I have $15,000 in cash. My retirement, Fundrise. Again, I'm not counting Realty Mogul. All my brokerage accounts, and then all my investments into real estate. And this is what the overall picture looks like. I have 59% of my actual worth tied up in real estate. 16% is in retirement. I have a small cash position of 5%. Non-traded REIT is making up about 7.68%, and then equities, which is stock market, is making up 12.28%. If we move over here to the right, this is what I'm going to be focusing on this year. I want to have a total market value or portfolio size of, weighting of 50%. Technology fund will probably be 20%, and REIT will probably be 30%. And that's spanning all my accounts. So, right now it's all kind of messed up because I just started this year. So I'll have to adjust my allocations as time goes on. Invest a little bit more into the technology fund, a little more into the total market fund until the REIT portfolio goes down. My stocks to Fundrise, non-traded REIT, which is passive REIT, makes up 38%. And my equities is 62%. Real estate to equities, I have the equities at 17%, and then the physical real estate at 83%. And this one, I'm going to keep this at 80%, and then keep this at 20%, or at least try to keep these at 20%. I believe there's a study done by, I forget who it was. I read it somewhere, but there's a study done that this is the most optimal allocation for physical real estate or private real estate to public real estate. Having 20% in public real estate, trade on the stock market, or probably like a public REIT like Fundrise, and then 80% tied up in private real estate. So I heard, and I wish I saved the link, but this was the optimal allocation size. Or allocations. So this is what I'm going to roll with for the remainder of the year. I doubt I'm going to be able to keep it this perfect. I'm sure it'll change, but just wanted to make everyone aware. If we're looking at my dividend income from my M1 Finance portfolio, we can see that in June, when I first started, I got a dividend return of $3.40, then 21, almost $22, then $20, then $17, then $61, then $20, and now $30. All right, so over time, I expect this graph to go up, 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 and up. And as time goes on, I'm just going to keep reinvesting those dividends back into the portfolio to hopefully snowball it. And again, you could see videos on this. You could see my real estate income portfolio videos. Also, my buy update videos includes the dividend income portfolio made up of real estate investment trust known as REITs. So, that was a lot to say. I'm not going to go into these. As you can see, I've been doing these for a long time. Like, I have the spreadsheets have changed over time. But I just wanted to show you guys that stuff, and then my income statement, which I won't be showing you guys. But anyways, hope you guys enjoyed the video. This is my spreadsheets. This will all be updating probably monthly going forward for this channel, just to show you guys kind of where I'm at and what I'm buying, what I'm investing in. And I hope this inspires you or inspires people who are watching this to uh, try something like this. Create a spreadsheet. Start tracking your money, start investing, and just watch things grow. It will grow over time as long as you remain disciplined and you keep throwing your money in the markets and you keep throwing your money at a plan. And if you even have a plan, you create a plan and you stick to that plan. Over the long term, you will come out on top. But it starts with being disciplined and just staying with a single plan. Anyways, if you guys liked the video, hit the thumbs up. If you guys didn't like the video, no big deal. Hit that thumbs down. Please subscribe to the channel if you like the video, if you like this kind of content. Please let me know what your thoughts are down below in the comments section. And that'll do it for me. Happy New Year, and can't wait to make the next video. See you in the next video. Thanks for watching.